The stock market is almost back to all-time highs, with the S&P 500 crossing the 4,500 mark just recently. This has been because of the pretty insane rally within the last month, as the S&P 500 is up over 10% within this period of time. Because of this, some stocks are at all-time highs, such as Microsoft, which is almost a $3 trillion company. Because of all this success though, it begs the question, how should I invest my money right now? With stocks reaching new highs, it may seem hard to find good prices, but that is why in this video, I'm going to go over what I am doing with my money right now, even when the stock market is reaching a new peak, and hopefully this may give you some ideas of what to do as well. Anyways, let's get right into it. Before we start this video, make sure to like and subscribe if you're new to the channel, because I will be posting dividend stock videos just like this one every few days. Due to the recent rally that I went over in the intro, I've been putting a lot more effort into decision when buying stocks. This is because basically all of my stocks are into the green right now, and there is no way for me to lower my cost basis, making decisions pretty hard rather than just throwing money at one of my favorite companies while lowering my costs. So that is why I will explain what I've been doing. Firstly, I want to say that I have still been buying stocks during this time period. Although the overall market is high, some stocks are still pretty respectable deals. I do not love the idea of investing into the overall market when it is reaching all-time highs unless you are fully committed to dollar cost averaging, which can definitely still be a good strategy, but you can still buy individual companies that are fairly valued. For example, I have not been buying stock in most of big tech right now due to their high prices, but some companies such as Lowe's, Altria, and ExxonMobil are looking like they are pretty fairly valued. Although, for example, Lowe's and Altria are still up massively from their recent drop, in the bigger picture, they are still sitting pretty. Lowe's, for example, is down just around 25% from all-time highs and even 15% down from recent highs. Although the stock isn't down to the mid-180s it was earlier this month, the price is still looking good, and it is a stock I've been buying. In addition, Altria looks to be at a good price, even though it is up 5% just this month, which is historically a ton for this stock. Altria stock is still down almost 10% in the past year, and the super high dividend combined with the low PE still allows it to be pretty attractive. Lastly, ExxonMobil, the last stock I mentioned, also isn't necessarily cheap, but it is down almost 15% from recent highs, putting it at a pretty respectable PE of around 10.5. This is largely the same story with Chevron, but even more so, with Chevron stock being down almost 20% this year, and it now yields over 4%. These stocks are just some examples of companies that are still fairly priced, even when the market doesn't seem that way. When the market is expensive, that doesn't mean all companies are, which is why I'm still buying stocks, but I'm making sure to buy stocks that are still on a relative discount when compared to their all-time highs, which is definitely something I think you should be doing as well during this time. The second thing I'm doing with my money right now when the market is at all-time highs is saving a portion of it. This isn't something I think you should do a lot of, but saving a small bit of your cash as a hedge against a potential stock drop I think is smart. I think dollar cost averaging in the long term is the better strategy, but if you want to save maybe around 5 to 10% of your stock money as cash to wait for better prices, I don't think that's a bad way to go either. That is why I'm currently saving a bit of my cash, saving my buying power in case stocks see a drop, which wouldn't be too unlikely as the market this year, although very positive, has seen some major swings. In addition, cash right now is a pretty okay place to put your money due to high interest rates. Now, with cash, inflation will eat away at your buying power over time, but for example, cash held in a Fidelity brokerage account, the broker I use, yields 5% right now. This is a no-risk, free 5% a year payment that Fidelity gives you just to hold money within your account. There are also other ways to save cash as well with high-yield savings accounts. For example, Marcus by Goldman Sachs currently yields 4.4% on their online savings account, and I'm pretty sure you can get that number to be even higher. Long story short, saving a bit of money I think is pretty smart right now, but I definitely would not be holding a large amount waiting for the dip, because if stocks continue to rise, then this strategy will really backfire. Also, if you do have a good amount of cash, make sure the interest on it is pretty good. Most checking and even savings accounts offer basically zero interest, which is a surefire way to ensure that your cash loses a lot of its value. That is why the second thing I'm doing right now is saving a bit of my cash, waiting for a small drop, but not a lot of it, and also making sure that my cash is in a place where it is making money for me through interest. Thank you guys for watching this video. I know it is definitely a bit of a shorter one and a little bit of a weirder topic, but I think it is a good video to put out there. It can be hard to know what to do when the market is at all-time highs. That's definitely the case for me. And although I'm not giving out financial advice in any way, this is just me saying what I am doing right now, and maybe you like my ideas, maybe you don't. Anyways, make sure to comment down below what your opinion is, and like and subscribe if you're new to the channel. Let me know what you're doing with your money right now, even when the stock market is super high. Are you still investing? Are you saving? Or are you doing a little bit of both? I will see you all next time. Goodbye.